Like I said, if you have any questions, just let me know. And let's get into it. I'm going to be switching between the Zoom screen and the trading view screen, just so you guys can see. But sweet, let's get straight into it. So before I get into the fun technical stuff, okay, this is going to be the roadmap to your success. You're going to see exactly what the strategy is based on in literally 2 minutes. Yeah, this was what this whole webinar is for, so don't worry about that. But this is the roadmap to success. Okay, this is what's going to make you a profitable trader, right? More than any strategy I teach you, any strategy you see on YouTube, etc. Okay, this is what separates the profitable from the unprofitable. For the first step is to ignore the noise. And by ignore the noise, I mean everybody's journey is different. Okay, some people reach profitability in 6 months. Some people take 3 years. For example, it took me 2.5 years. Okay, no two people are the same. Everyone's got the same end goal to become a profitable trader, but no one's curve is linear, no one's is the same. So please always focus on yourself. Okay, don't get distracted by people on YouTube, or you see someone on Twitter say, I made 100 grand today, or you see someone on YouTube say this, right? Just focus on yourself. The second step is market structure. Okay, for me, market structure is the best thing you can look at when it comes to trading, and I'm going to get into exactly why in the next couple of slides. So for me, it's ignore the noise, study market structure, and then find a pattern that repeats. Okay, this could be any pattern. This is the basis of any trading strategy. If you see that every time we're in an uptrend, we bounce off VWAP or we bounce off the 9, I don't trade indicators, but just an example sake, we bounce off the 9 EMA. You're finding a pattern that repeats. You're noticing every time we're in an uptrend and we touch the 9 EMA, there's a possibility of making profit. But that's not enough. This is where people try and then they stop. Okay, they find a pattern, they think it works, they go at it for a week, 2 weeks, they're not consistent, they lose money, and then they stop. So now you need to move on to this. Now, these three, okay, these three are the beginning of the trading journey. These three never stop. Okay, I've been trading for 5 years now. These three I've never stopped doing. Okay, you have to be constantly back testing and refining your model. If you find a pattern that repeats, right, you need to be able to refine it. You need to be able to back test it. Okay, take 100 trade examples. Out of those 100 trade examples that let's say we've taken from this night buying at the 9 EMA, you've realized when we're in a higher time frame fair value gap, your win rate is increased 50%. Why would you not backtest and refine your model? Okay, you can't skip these 3 parts. Then you have to execute by trusting your model. A lot of people backtest, they spend hours backtesting, they have their model, they jump into the markets and they don't trust it. They don't take the A plus setup, they take a C setup because they're scared the A plus setup is going to fail, or they're scared the A plus setup isn't going to turn up. And then they take something they know they shouldn't, and bang, they fail. And the next part is evaluate your executions. Okay, don't evaluate your outcomes. If you've done these 5 steps correctly, right, you found a profitable model that repeats itself that you can make money from. You've refined it. Okay, now all you're doing is extra. You know from data collection, if you take 100 trades, you're going to be profitable with that model. Now, I don't care if you take 10 losers in a row. I don't care if you take 10 winners in a row. The outcome isn't what's going to make you profitable. All I care about is did you stick to this trading plan you made in the first 5 steps? If you stuck to the trading plan, right, you're going to become profitable. So when you take trades, obviously see what you could have done better, see what you could have done worse, etc. But evaluate the executions. Did you follow your trading model that you found in these 5 steps? And that's what's the most important thing to trading. So before I get into the strategy, I just wanted to clear that up. Because if you don't have this sorted out, if you don't have this pattern, it doesn't matter what strategy you learn, it doesn't matter what somebody teaches you, you have flawed foundations, you're gonna fail regardless. Okay, so you need to make sure this is in check. Okay, now the next one is market structure. So why I'll get into my entries, time frames, etc. Don't worry, but the first step is okay, why do I focus on market structure? So now I'm going to put up the chart. The thing with market structure is there's structure with everything. Okay, any time frame, any chart. For example, let's go into here. This is the hourly chart, right? Can you see we have structure? We have high, low, high, low, high. Okay, we have structure on the hourly chart. I can go down to the 1 minute chart. right? What do we have? We have structure. We have low, high, low, high. These highs and lows, they're on any chart, any time frame. So if you understand, okay, why is price coming from this low? Is price likely to target this high? Is this high going to put in this low? Now, is this low going to take out this high, or are we going to respect this high? Are we going to take out this low? If you know how structure works, you have the market context sorted, okay? It's the most important thing when it comes to trading. Now, even on your P&L chart, right? Those who are trading, your profit and loss chart is going to look something like this. It's going to have high, low, high, lower lows. You're going to consolidate, then you're going to be making profit. You're going to be like, yay, my account's at all-time highs. Then you're going to have a pullback. Then you're going to go into a bit of a downtrend. Then you're going to continue higher, right? Everything in your life has structure at the end of the day. So this is why I build my whole trading model of structure. So like I said before, people ask me what time frame this, that, the structure on any time frame. So that's not the problem. So I'm just trying to read and multitask at the same time. So now, how do we read structure on a chart? So the majority of people, they think structure is like this. This is the basic understanding you get when you come into trading. And it's right, but this is too simple, okay? This is not how it works on the charts, but we have three types of market environments. We have an uptrend. In an uptrend, we put in a high, okay? We put in a high and then a low. Now, we know this is an uptrend because we put in higher highs and higher lows. So once we break this high here, okay, this is a break of structure. But bear in mind, this break of structure, it has to be a candle close. It cannot be a wick. If this is a wick, then it isn't a break of structure, okay? So we have high, low. Then we have what? Then we put in a higher high. So we're breaking highs and we're respecting lows. Can you see we have a low? We respected this. We never broke it. And that's what we're expecting. So we're expecting, again, price to respect this low. And we're expecting price to run this high. Again, it needs the candle close. Then that's your breaker structure. Now, as we come down, what are we expecting? We're expecting price to respect this higher low here, right? It should not come below this. And it should do what? It should take out this high here, giving us a new breaker structure. So if you saw this type of market environment, you know structure is bullish. Why would you be looking for sells here? If I buy anywhere here, right? If I buy in this low, I'm going to be in profit. Even if I buy at the higher high, which is stupid, you shouldn't do that. And we're going to go through where to buy, etc. from later. Even if I buy from this higher high, okay? Yes, I'm in drawdown, but then I eventually go into profit. Again, if I buy at this high, I go into drawdown, but then I'm eventually into profit. Obviously, we want to buy at these higher lows so we don't go through this drawdown and we can continue up through profit. If you can't see the screen, bro, please join the Zoom link. I'll post it again for you. One sec, I'll send the Zoom link. So it tends to be like the first 20 people can always see the Discord, and then this can't. I just sent the Zoom link again. No problem, no problem. I'll give you guys 30 seconds to quickly join. But does this all make sense so far? Join the Zoom if you can't see the screen, bro. Yeah, I'll get back into it. So when we break, so if we see this, right, we're only looking for buyers. If you sold anywhere here, even if you sell at this higher high, you're going to eventually be in drawdown. If you buy anywhere here, you're going to eventually be in profit. So now you know structure is bullish, you should definitely look for buys. The second type of market environment is this range model here, okay? Yeah, thank you, bro. Thank you, guys. Yeah, if you can't join, please, if you can't see the screen, please join this. So now we have this range environment here. Ideally, okay, we're not going to trade this range. For this model, we're only going to be looking to trade uptrends and we're only going to be looking to trade downtrends. And downtrend is the exact same thing, just the opposite. We put in a low, okay, then a lower high. and then we do what? We break structure to the downside. So in an uptrend, we break structure to the upside. In a downtrend, we break structure to the downside. This is now a break of structure. We put in a lower low. So if we're expecting lower highs and lower lows, again, this has to be a candle close, we can expect price to do what? We can expect price to respect this high, right? And break this low. So where should we be looking for a trade? Between here and here, right? We need to try catch this lower high. So we're going to wait for market to pull back. Then what? Try catch sells to ride the wave down. And the exact same thing here. Now we have a lower low. But we're not going to buy down here. Again, if we're in a downtrend, we're expecting what? We're expecting this lower high to hold, and we're expecting this lower low to get broken because we're making lower highs and lower lows. The context, the structure is bearish. So we're going to expect price to pull back, look for sell somewhere here, and ride it to the target there. So that's the very simple first part of structure. Does that all make sense? I just assume it does, because if anyone has any questions, just type it. But unfortunately, the market doesn't look like that, okay? This is how the market moves, but it doesn't actually look like that when we get onto the chart. So this is going to be more of a realistic expectation of what the market does look like. So let's focus on the same thing. We have a high, okay? And then we break structure to the upside. So here is where we candle close. Now, where is the low responsible for putting in this high? Okay, you want to look at the lowest points between this high and where we broke it. The lowest point between here and where we broke it is where it is this low here. So this is the low responsible. Please don't join the Zoom, guys. I didn't even know you could do that, but please don't do that. But the lowest point between this high and where we broke it is here, okay? This is the low responsible for putting in this high. So now we can expect this high to hold. But between here and here, what did we hit? All this here is internal. Okay, this is our external structure. This is where people get confused because we're in a clear uptrend, but people are seeing breaker structure here to the downside. Okay, and then they're seeing breaker structure here to the downside. But this is all internal, okay? Internal. They're thinking downtrend. And then what? And then you get smoked because price comes back up to here. And now you're thinking uptrend. And then you get smoked again. So you need to know your external from your internal structure. So now this is our low. This is our protected low, right? This is the same low that put in this high here. So what we expecting? We're expecting price to do what? We're expecting price to respect this low and put in a higher high. Okay, so that's exactly what we do. We're continuing with the trend. Everything between here is all internal. Yeah, if you can't see the Discord, please join the Zoom. The Zoom link is just above in the chat. Yeah, if you can't see the Discord live stream, please join the Zoom. I feel like I'm gonna. Thank you, Cash. I appreciate you, man. Um, this break of structure here. Thank you, bro. I appreciate that, man. I do appreciate that. This break of structure to the upside here. So all this again, all this here is just internal. Okay, if you're seeing this and you're thinking downtrend, right, you're gonna get smoked because you're gonna start looking for sells. Right, you're gonna think, oh look, price is breaking to the downside. Let me start looking for sells, and then boom, price comes straight back up, and you get stopped out. Okay, and then as price starts moving to the upside, you're like, oh look, let me look for buys. Boom, you get stopped out again, and then price goes back up. So don't focus on this internal structure. All this is a fancy way of pulling back. We put in a high, we pull back. Okay, here we put in a high, we pull back. We put in a high, we pull back. But these pullbacks aren't as simple as these straight lines down. but they are the same thing. We break structure, we put in a new high. So again, what is the high low responsible for breaking structure, for putting in this high? It's the lowest point between here and here. So the lowest point between here and here is here. This is now our protected low, where we don't expect price. We expect to pull back above here and then higher high. So now if I mark our external structure, I can see we've done high, low, high, low, higher high. Okay. Is this now looks a lot more similar to this? This is a lot more easier to read structure than trying to catch all this internal move here because you don't know what you're looking at. Yeah, my bro, it's recorded. What exactly are you battling with seeing the screen or with understanding it? Because if you're battling with understanding it, then please ask questions. Okay, so that's how structure actually moves. Now let's look into how do we know where to actually find our entries, find our trades, etc. Bro, can you recap your 6.0? I want to watch it back. So I'm just reading the Zoom chat. Yeah, we're gonna go through full trade recaps after, but I just want to go through every step because if I go straight to step 6, no one's gonna understand it. We'll get into timeframes as well. We'll get into timeframes as well, but any time frame works because structure is present in any time frame. Okay, so now let's talk about zones and how we find them. So we've established this break of structure. So can you see here we have a low and we close below the low. This is where price closed below this low here. So based on what we just said on structure, right, we want to look at the highest point between this low and where we broke it. Because now this is the high responsible for putting in this new low. So now price is trading between this high, oops, and this low. So we're expecting a pullback into here and lower low. So we draw a zone from our previous low to our current high. Okay, this is where we want price to tap into before moving lower. It's the same thing here. We have a high, we have a low. Okay, we have a high, we break structure. We candle close above this high. So this is our higher high. Why is this the higher low? Because this is the low responsible, right? This is the lowest point between this high and where we broke it. So higher high, higher low, higher high. So what are we expecting to catch? We're trying to catch this higher low and ride it all the way up to this higher high. Where are we looking to catch? In this previous range here, between this high and where we broke it, right? This range here, this is where we want price to pull back into and then continue higher. So I'll show it on a chart. Right, can you see here? Thank you, bro. Appreciate that. This is a break of structure. So we have high, low, higher, high. What we expected, we've just talked about the last 20 minutes. This is how the market moves, right? This is a very basic way of how the market moves. We just need to not get caught up in all that nonsense we just saw. So if we're expecting a higher low into a higher high, where do we want to look for buy? We want to look for buys in our previous range. Our previous range is this high to this low because this was the previous range price was trading in. Okay, so now we can expect price to tap into here. This whole zone here, this is where we want to look for buys before price continues up. Now, some of you are going to ask, what if price doesn't tap into here and we continue up? Then guess what? We don't get a trade. Okay, this is what's going to separate the unprofitable from the profitable. If you're not patient enough to wait for price to come into your zone and you're just taking a random buy here, or you're taking a random buy here, or you're taking a random buy here, then you're gonna get stopped out. You're not gonna be consistent because you're not having consistent entries, right? You're not following your model. So now again, we break structure to the upside here. So where are we looking for our trade? Well, this is now our last break of structure. So we're looking for price to retrace into this zone here. Why? Because now this is our protected low, right? This is the low responsible for putting in this high. So price should not come below this low. So again, we're trying to catch this higher low and ride it up to this higher high here. Okay, these are how we draw our zones. Now, I'll do it on a downtrend, but it's the exact same thing. We're expecting lower highs and lower lows. So when we break structure here, okay, we can now draw a zone from this low to this high because we're expecting price to what? Put in that lower high and give us that lower low. And then we break structure again. So now we've closed below here. Where is the protected high? Low. Where's the highest point between this low and where we broke it? It is here. So we're not expecting price to come up back above this high. So we want to look for sells below this high here. So we now draw our zone from here to here. We look for sells within here to ride price down. So again, I hope that makes sense. If it doesn't, please let me know. But that isn't enough. Okay, that isn't enough. We need to now look at liquidity. So for those who don't understand what liquidity is, it's like if any of you drive a car, for example, okay, in order to get from A to B, you need to put in petrol, you need to put on diesel, you need to put in whatever. You can't just get there with nothing in the engine. It's the same thing. The market does the same thing. If the market wants to head higher, we need to get that fuel in order to head higher. If the market wants to go lower, we need to get that fuel in order to go lower. So let's say the market wants to go higher. This is the structure. This is the context, right? This is what we need to look at. So let's say the market environment is this. We've established we're doing this. We know price wants to go higher, but we can't just magically go higher. Okay, we need to get that liquidity in order to go higher. So in an uptrend, lows are our liquidity. Okay, so price is going to do something like this. Right, what do we have here? Can you see this is like an obvious support area? A lot of people are going to have their stop loss here. They're not expecting price to go lower. Are we expecting price to go lower or higher? Well, based on our market context, right? We're expecting price to go higher. But it can't, can you please, Justin, yo, uh, don't draw on the chart, please. Otherwise, I will have to start kicking people out. I don't want to, but I will have to. Um, before we head higher, we need to now take out this low and then we can continue higher. Here, now we've gathered the fuel in order to continue higher. It's the exact same thing. If we're in a downtrend, right, we can't just magically continue lower. We need to get that fuel. These fuels are these highs here. Okay, you're going to see something like this, like an obvious resistance level, for example. Okay, now a lot of people are going to have their stop loss here. Are we expecting the price to go higher or lower? Well, based on our context, based on our structure, have patience, my bro. I'll get into the whole setup, and I'm going to get through trade examples. But you need to understand this first. If you don't understand this, it's nothing, none of the entries, etc. None of it's going to make sense to you. So if this is my market structure, if I know price is likely to go lower, okay, I'm waiting for, it's all good, my bro. I'm waiting for a high to get taken first, okay, because I know price isn't just going to magically continue lower. I need it to get this liquidity here and then continue lower. So this here, where we swept liquidity, where we stopped out everybody, okay? Liquidity sweep is where we stop out everybody. Everyone who had their stop loss here, we've taken their money. Now, what have we done with their money? We've used that to continue with market structure. We've used that to continue with where we want to go. So if that makes sense to you, now we'll get into through how we use it with our zone. So if this is our zone, okay, so can everyone now, Discord, Zoom, can you see my screen? And can you hear me, fan? Perfect, perfect. So now we'll get back onto what we were talking about. How can you not hear or see me if you heard that one, bro? Yeah, join the Zoom if you can't. Okay, perfect. So now how do we incorporate this, the top Zoom link, the most perfect. How do we incorporate this liquidity into our zones? So if this was our zone we were looking at, and this was our breaker structure, okay, we want to buy from this zone we've established because we're in an uptrend and we're making higher highs, higher lows. So we want price to retrace into this zone, but we need liquidity first, right? We need that low to be swept so we have the fuel. If you don't wait for that liquidity sweep, you're going to be the people who get stopped out before price goes exactly where you want it to go. So we need a tap into this zone, okay? And we need this tap to give us a higher high, okay? Now, can you see we've tapped into the zone and we've made a higher high once we break this high here. Now, this is liquidity, okay? Now you have liquidity within your zone. Now you can look for price to retrace into here. Okay, you can wait for it to sweep liquidity, tap into your zone, right? Put in that higher high we were talking about, right? And then, so we put in a higher high, higher low, higher high. Now we've swept liquidity, right? Now we've stopped out everybody. A lot of people are going to have their stop loss here. They're going to get stopped out. We're going to use that fuel to catch this higher low here. And we're going to ride it all the way back up to this higher high. Okay, so we're still making higher highs and higher lows. We're still following structure, but now we're incorporating liquidity into our model. And it's the same thing with a downtrend, okay? We put in a low, high, lower, low. So where's our zone, okay? We had a low, we broke structure to the downside. So we've established now that this is our last break of structure. This is our zone. We're expecting price to put in a what? A lower high and then a lower low. So we're looking for an entry in this zone, but what do we need first? We need liquidity. We need that fuel. If we don't have that, then we can't expect price to go where we want it to go. We're going to be part of the people that get stopped out. So we need price to come back into the zone, okay? And we need the tap into the zone. This is important. We need the tap into the zone to make a lower low. Okay, if this tap does not make a lower low, this isn't liquidity. Okay, we're not looking at this. Only when this tap, right, this tap is up here, this isn't valid. We're not looking at this. Okay, then price can continue higher, do what it wants. When we have the tap that makes the lower low, now can you see this is the tap that made the lower low? This is the liquidity. This is where we wait for price to sweep this, okay, look for sells, and then we look to ride it down. Okay, so hopefully that does make sense. Let me just check the chat in case anyone has any questions. Would that new high not create a new zone? That's a good question, bro. That's a good question. So I'll get into that as well. So this isn't a new break of structure, okay? Because we're basically waiting for two breaks of structure. We're waiting for one, two, the first one to get swept, and then we continue lower. But this doesn't have to be, these taps don't have to be so aggressive in, aggressive out. They could literally be, right? And I'll show you when we do the trade examples, it could literally be this, a wick in, a wick out. Now you're not going to count this as a protected high, etc. You're going to count this as just liquidity. Look for price to sweep that and then continue lower. All right. Just want to make sure this Zoom is, yeah, it's recorded. Perfect. So now let's get back to this. So now, can you see we have that zone? It's the exact same thing too. We have a low, we have a high. We're making lower highs and lower lows. So we're expecting a lower high, lower low. But before we put in that lower high, we need price to sweep liquidity. Liquidity in a downtrend is highs. So we swept these highs and then we got this aggressive move down. Same thing, we have high, low, break a structure to the upside. So we draw our zone between this previous high to this previous low. Now, where are we looking for a trade? We're looking for a trade in this zone. Perfect. But what do we need? We need liquidity to be swept before continuing up. Now, I've circled this low here. So if everything what I just said makes sense to you, please explain to me why I've circled this low as my liquidity and not these two. Okay, why is this my circled liquidity? Why is this not my liquidity? Why is this not my liquidity? Why is this low here and specifically? Why is this my liquidity? Nice, nice. You guys are getting it exactly because this is the tap, right, that made this higher high. Can you see we tapped back into the zone, we made a higher high. These taps here, they never made a higher high. So people aren't putting their stop loss here. People aren't putting their stop loss here. But they are putting their stop loss here because to them, this is the low that put in the new high. So they're not expecting price to go below here. What do? We take them out and then we continue higher. Okay, so we'll continue. We're getting close to the full entry now, pulling it all together. Now, this sounds simple, okay? This is the basis of every trading, whether you're long-term trading, you're short-term, you're scalping, etc. You want to buy low, you want to sell high. It's not complicated. It makes sense, but how do we establish where we're going to buy low from and where we're going to buy high from? Again, I'll show you on the chart. So if we have this range here, right? If we're in an uptrend between this low and this high, we're expecting a higher low, higher high. But we don't want to buy all the way up here. And we want to buy where? Can you see this is our zone based on what we learned? Because this is where we last broke structure. Okay, high, low, higher, high. We want a retracement into this zone. Look for buys to continue with the trend. But how do I know where to buy? Simple, okay? You want to buy. We want to be buying in this discount area, in this green area, okay? And for me, that's anywhere below the 618. Again, I'll get into that more specifically when I go through the trades. But if this is my zero, okay, I'm not expecting price to go below here. I'm expecting price to break this. So I draw a fib from here to here, and I want to enter in this discount area. Okay, here I'm looking for buys. In this red premium area, that's where I want to be selling. So it's the same thing now on this. If we're in a downtrend, this is our protected high. Okay, this is our weak low. Why? Because we're expecting price to respect this high and put in a new low. But we don't want to be selling all the way down here. So we do the same thing, right? We draw the fib. And where do we want to be selling? We want to be selling in this red. We want to be selling in premium, right? At these high prices. Think about it. If you're selling an Apple or if you're selling a jacket, etc., you want to sell it at a high price, don't you? If you're buying, you want to buy it at a low price. So make sure you're selling in this premium, you're buying in this discount. This way, I'm not chasing any moves. I'm waiting for price to retrace into here, and then I'm able to sell high, and I'm able to buy low. So that is simple, but it does need to be explained. So now context, okay? Context is everything. Absolutely everything. For example, if I was offering you the best winter jacket in the world, this winter jacket, right? So I'll just check it. You might have more. Yeah, if you have more than one Zoom or one Discord opened, then it's probably why it is echoing. But let's say I have the best winter jacket in the world. Like this jacket keeps you warm regardless. It doesn't matter if it's minus 100 degrees, you're gonna be warm. That's a great jacket. That product works, right? But if you're living in a country where it's never below 40 degrees, it's summer all the time, are you gonna buy that jacket? No. Does that mean the jacket doesn't work? No, it's a great jacket, it works. But the context around is you're not gonna ever buy that jacket. You're not ever gonna wear that jacket because it's always super, super hot where you're living. So it's the exact same thing in the chart. We need context. So if I showed you this bearish fair value gap here, okay, how many of you are gonna sell here? Thinking, oh, look, it looks like resistance. We're tapping into this bearish fair value gap. I'm expecting price to go lower. But you're using that concept, right? You're buying that winter jacket, but you don't know what the weather is like. You're selling in this bearish fair value gap, but you don't know what the market is, if the market wants to go higher or lower. So if you find success sometimes in here and then sometimes you get smoked, it's because you don't know where the market wants to go. The concept works, okay? Bearish fair value gaps works. But if you don't use it in the right context, if you're not using it when price wants to go lower, you're gonna get smoked. You can't see my screen, join the Zoom, bro. So what is price doing here? We can see price is making higher highs and higher lows. We have a high, we break this high here. Thank you, Cash, again. High, low, higher, high. So what are we expecting price to do? We're expecting price to respect this low here and do what? And take out this high here. So if you're getting caught up between whatever happens in here and here, you're getting smoked because you're trying to trade the internal structure. We know externally we should respect this, and we know we should disrespect this. We should break this. So if you know price is likely to respect this, and if you know price is likely to break this, why are you selling? Why are you taking this bearish fair value gap? You know price is more likely to head higher than lower. You're getting smoked. What do we have? We have a load of bullish fair value gaps here. Okay, why are these bullish fair value gaps working? Why are these bearish fair value gaps failing? Because the context is market structure. What is market structure doing? Market structure is putting in higher highs and higher lows. So if you're using concepts in the wrong context, you're gonna get smoked. So now again, I'm gonna ask you this. Any time frame works, bro. This structure in any time frame. So I'll ask you this now. Let's say you saw this on your M1, okay? Like I said, people get obsessed with time frames, right? I use the M1 for my entry, okay? The 1 minute time frame. I use the 5 minute and the 15 minute as my higher time frame. I appreciate that, bro. I'm glad that makes sense. Yeah, that's why a lot of people get messed up, right? They're taking the concepts that work, but in the wrong context. Like the winter jacket works, but it's useless in summer. So this M1, okay, this is my 1 minute time frame. I always want to use it in context with my higher time frame. If I'm taking an M1 entry, I want to make sure it makes sense on my higher time frame. So my M1, I'm bullish. I put in a high, I put in a low. I broke structure to the upside. I'm expecting price to pull back, respect this zone, respect this low, right? Because this is the low that put in the higher high, and then price to continue. But this is my M5. What do I see on my higher time frame? I see we put in a low, a high. We're breaking structure to the downside. Now, can you see, right? We break the zone, we tap back in, and then we make a lower low. So this tap into the zone that made a lower low, this is liquidity. This is where I'm expecting price to sweep and dump. So if you're seeing this on an M5, if you're expecting price to, this small uptrend on the M5 is going to look like a big uptrend on the M1. You're going to be looking for buys on the M1, not knowing that what we're likely to do on the M5, we're likely to sweep this and then continue lower. So now you're taking buys in this zone, but the higher time frame wants to go lower. The higher time frame just tapped into a bearish zone. So if you're taking this bullish zone on the M1, do you think you're going to work or do you think you're going to get stopped out? Seems simple. And of course, you're going to get stopped out, right? You're taking buys in this M1 zone, right? You're just long in every zone you see. And the M5, what do? We swept that liquidity to a T and we started dumping. Now you're taking buys, you're stressing, you're getting stopped out, thinking, why did this zone not work? Why did this bullish fair value gap not work? Because your context is wrong. You're not seeing on the higher time frame, the market wants to head lower. And again, this is any time frame. If I'm using the M1 as my entry, just times it by 5. I'll use the 5 minute as my higher time frame. If the 5 minute's not clear, exactly, you'll get stopped out. I'll use the 15 minute. Okay? If I'm trading on the 5 minute as my entry, I'll use the 30 minute as my higher time frame. If the 30 minute's not clear, I'll go to the hourly. I'll go to the 2 hour. Okay, you can scale it up appropriately to any single time frame. You can use the 5 second time frame as your entry. Then I'll use the 1 minute time frame as my higher time frame context. So yeah, higher time frame, higher powers, right? You need that higher time frame concept. And again, scale it accordingly, right? Any time frame, it works the same. Yes, in all situations, you need 2 to 3 time frames. I enter on the M1, I check the M5 and the M15 for my context. If you're entering on the M5, check the M30, check the 2 hour for your context. Okay, it's simple. Otherwise, if you're just trading every zone you're gonna see, you're gonna get smoked and then wonder, yo, why am I getting smoked? Okay, now let's put it all together. So all we do, I'm glad, my bro. I'm glad that makes sense. All we're gonna do is count to 6. That is the model. So we're gonna incorporate market structure. Are we buying or are we selling? Well, simple. Are we in that uptrend we talked about or are we in a downtrend? Then we find a zone. Okay, we look for our last break of structure. We want to enter in that zone. Then we want liquidity. Okay, we need that liquidity sweep. Higher high. Sweep a high. We continue lower. Okay, and as always, we buy low, we sell high. So remember how I said I always enter at that 618 level. Okay, that's where I want to look for my entry. Yeah, I will post this on YouTube. Give me a bit because I'll have to chop it up from when it cut out, etc. Put it all together. But I will put this on YouTube. So this is the model you guys all have for free in the what tab is it? In the My Strategies tab, AMN trading model. Okay, this is exactly how I trade, and it's what I've been saying just in a picture form. And this has been there for months now. Okay, it's been the same thing over and over again. We have a low, we have a high. We break structure to the downside. Okay, we come back into the zone. The tap back into the zone, what does it do? The tap back break structure. Okay, we tap back into the zone, we break structure. Now what do? We sweep the tap. We sweep the tap. Boom. We dump. We continue with the trend. Exact same thing. We have a high. We have a low. We break structure. We tap back into the zone. Surprise, surprise. The tap back, break structure. What do? We now sweep this tap. We stop out everybody who had their stop loss here. We say thank you for your money, mate. And we continue with the trend. Okay, so now let's get into trade examples because I know you guys, that's what you like the most, right? So now, okay, hopefully this all makes sense now. And now we'll go through actually putting it all together with examples. So we're going to focus on this chart here. Now, what can I see? Okay, I can see we had a low. Oops. We had a low, high, lower low. What did price then do? Price came and closed above. These wicks do not count. We need a close for breaker structure and change of characters. Price came and closed above this high here. So what does that tell me? Are buyers or sellers in control? Now I know that buyers are in control. We have started an uptrend because we made a low, lower high, lower low, higher high. That shouldn't happen in a downtrend. So now I know what should I be looking for? Buys or sells? I should be looking for buys. Where was my last zone? We were previously trading between this high and this low. So I'll draw my bullish zone here. Okay. So what am I expecting now? I'm expecting a tap back into here, higher high. Okay, this is now my low, higher high. I'm expecting price to put in a higher low and then a higher high again. And I have my zone. Why am I not expecting this low to break? Because this is the low, right, that gave me this change of character. This is the low that put in this high here. So if I'm in an uptrend and this is my low that put in a high, I'm expecting this low to hold. I'm expecting this high to break. I'm looking for buys anywhere between this low and this high. Again, what do we need though? We need liquidity. Can you see we had a tap into this zone here? Okay, we could even use this tap to keep it simple, right? We broke out the zone here. We tapped back into the zone and we made a higher high. So this tap here now becomes liquidity. This is where people are going to put their stop loss, not expecting price to go lower. What are we expecting? We're expecting price to sweep this and then continue higher. Now, where do I want to enter? Again, right, I don't want to enter in this premium area. I want to be buying in discount. So all I do is literally draw a fib from the bottom to the top. Okay, I'll keep it simple. I'm going to enter at this 618 area here. Okay, so we have our 6 taps. We have, so I say count to 6. Okay, we have our 1, 2, which is just the zone. 3, we break out of the zone. 4, we tap back in. What does the tap back have to do? The tap back has to break structure. 5, okay? Now we can expect 4 to get swept. Again, look at the free model it's posted on here. It has the 6 taps. It explains what each tap is for. We're expecting this to get swept and higher, high. Why am I entering at this 618 level here? Because now I know I'm entering at a discount. I'm entering where price is cheap and I can ride it back up and sell it when price is expensive again. So we'll play that out. Now again, what's the context we need to check though? We need to check the higher time frame context. What has the higher time frame done? You can see the higher time frame was putting in lower highs and lower lows. The higher time frame was bearish. Then what did we do on the higher time frame? The 5-minute time frame. We switched bullish once we closed above here. So the higher time frame has gone from bearish to bullish. Both time frames are bullish, right? Both times they were expecting higher highs and higher lows. Where's our higher time frame zone? We had this low, this high. We broke this. We got to change the character. My previous zone was from here to here. Okay, I'm expecting price to do what? I'm expecting price to pull back, respect this low, and make a higher high. So on the 1-minute time frame, right? When I'm looking for my trade, this was the zone we had established. Okay, we're established. We're looking for buys in this 618 area after sweeping this liquidity. Does it make sense for me to buy on the higher time frame? Yes, because the higher time frame is bullish. I'm expecting this to be respected on on a higher time frame. I'm expecting price to break this. So all I'm looking is to catch this wave to the upside. So we'll see what price does. And guess what? If it doesn't touch the 618, I don't get an entry. I missed a move. I don't care because this is my trading model. This is what makes me profitable. Why am I going to suddenly trade that? Change that. And bang, we do exactly that, right? We pull back. This is a great scenario. We get 0 drawdown and we put in that higher high. And where are we expecting price to go? We're expecting price to take out this high here on the higher time frame, right? High, low, higher high. All we did was ride with that wave up. Does that make sense? We'll get into another example. Another time frame. So again, this is the 5-minute time frame, okay? I know people get fussed about the time frames, but I'll just check the Zoom chat. Okay, nothing on the Zoom chat, so all good. This is the 5 minute time frame. We have this bearish zone here. Why? Okay, first of all, why is this a bearish zone? Where is our last break of structure? We have a low here. We broke structure to the downside. Break of structure. So what is this now? This high, right? This is the lowest point. This is the highest point between this low and where we broke it. This high is responsible for putting in this low. This is a strong high. Are we expecting this high to break? No. So we're looking for a trade where somewhere below this high to ride it down. So where's our zone? Our zone's our last break of structure, which is between this low and this high. Now, what do we need? We need liquidity. So this is our 1. Right, we just count to 6. This is our 2. This is our 3. Can you see 3? We break out of the zone. 4, we tap back in. What does 4 do? 4 creates a lower low. What do we need before we enter? We need this tap to get swept. There's a liquidity sweep. Now, is it safe for me to enter all the way up here? What do I wait for? I want price to come to where? This 618 level. Is there situations where we sweep the tap, we don't tap into here, and we start dumping? Yes. Am I going to cry about it? No. I'm just going to keep following my setup. So when price taps into here, this is where I'm going to enter. Okay, there I get my entry. Where am I going to put my stop loss? Well, I'm not expecting price to do what? I'm not expecting price to make a higher high because this is the high responsible for putting in this low. So I'm not expecting price to break this high, but I am expecting price to break this low. So where am I going to put my take profit? I'm going to put it at this low here. We'll play that out. Nice. We hit take profit and we're not doing anything crazy. All we're doing is following structure. We're following these lower highs and lower lows. We're just waiting for a sweep, a good area to enter, and continue riding with the structure, right? People who focus on this external structure between here and here, people who focus on this, they're thinking uptrend. They're thinking, oh, bullish fair value gap. Oh, we're going to the moon. Oh, another bullish fair value gap. Oh, nice. Yeah, let's buy. But you don't know the context is bearish, but we want to head lower. And then you're getting smoked because you're going against the trend. We're putting in lower highs and lower lows. Always go with the trend. Show you more examples. All right, again, any time frame. So this is what we talked about with the guys in the premium. This is why we've had a bearish bias on gold because this is the hourly time frame. Right? We were in an uptrend. Then what? We've got to change the character to the downside. Giving us a what? 1, oops, 1, 2. Did we break out of the zone? Yes. Did we tap back into the zone? Yes. Does this tap back make a lower low? Why is this tap not my liquidity? It's this tap because if this was a break of structure, we look at the highest point between this low and where we break it. So this is the tap that broke structure. Boom. What does this become? This becomes my liquidity. Where am I going to enter? I'm going to enter at the 618 level. Okay, this 618 level is below my liquidity sweep. That doesn't make sense, right? Why would I enter here if I'm expecting price to sweep this liquidity? So in this situation, I'd wait for price to sweep this liquidity. Okay, then I'd enter after we swept liquidity. What am I expecting price to do? I'm expecting price to put in now a lower low and run this because this is the high responsible for putting in this low. I'm not expecting this high to break. I am expecting this low to break. So now I'm just going to keep looking for sells to ride the wave. That's why gold in the last couple of days, we've only really been looking for sells ideally, because we know according to this hourly time frame, we should now, this is where we're up to today, so it hasn't fully played out yet, but we know we should break this low, and we know we should respect this high. Okay, but I'm just trying to show you any time frame, any time frame. So again, another example here. So let's start on the higher time frame, right? We get an idea of the context. You can see we were indeed trending lower. Then what did we do? Again, we broke this high here to the upside. So now the higher time frame is bullish. This is our last zone on the higher time frame. So we're expecting this low to be respected. We're expecting this high to be disrespected. All we're looking for is a pullback, catch this higher low, put in the higher high. So now if I go on the 1 minute time frame, I know I should be looking for buys, okay? I should be looking for bullish setups. You can see we have a high here, we break structure. Okay, giving us this bullish zone here. What do we do? Can you see we tap back into the zone, and this tap back gave us what? It gave us a higher high. So what is this tap now? This tap is now liquidity. So what am I expecting price to do? I'm expecting price to tap into here and move higher after sweeping liquidity. Where's my entry? My entry is this 618 fib. So play price out. Okay, now people are going to be stressing, oh, what about this bearish fair value gap? I should be selling here. If we know market wants to go higher, if we know context is bullish, do I care about this bullish fair value gap? No, right? I'm expecting higher highs and higher lows. Play that out. Right, this one takes a minute, but it does the exact same thing, right? We put in a low, we put in a high, we put in a, sorry, another high, another low, break a structure to the upside. What can we expect? We can expect price to respect this low and put in a higher high. And that's all we did. Here, we made sure we entered in a discount area where price is cheap and we waited for liquidity to be swept. If you had your protected low here, everyone who had their protected low here, they get smoked and then price goes exactly where you want it to go. So that is everything I wanted to get through today. Okay. Is there any questions? I appreciate it made sense, bro. I'm glad it helps. Man, that was great. Yeah, 100% my bro. I'll be on YouTube. Give me a couple hours, I'll put it on YouTube. Reversal in the market. So yeah, of course, right? Trends don't continue forever. We get we get reversals in the market, right? The simple answer to this is okay. Statistically, I'm sorry, Harry, it's a bit late now, but it is recorded and it'll be on YouTube. Statistically, right, price will 70% of the time continue with the trend. So if I take a buy in this zone here, right, that's one win. Okay. Then I take a buy in this zone here. Okay, that's two wins. Okay, then I take a buy in this zone here. That's three wins. Then I take a buy in this higher zone and I get smoked. I get stopped out. So that's one loss. So you've taken three wins, okay, before you've taken one loss, and all you did is follow structure. If you know structure is likely to be respected 70% of the time, right? That's all you have to do. There are certain signs that we look at to see when this price reversal is going to happen, and that definitely increases our win rate, right? It's after we take out higher time frame key levels. That's why those who are on the premium, right? They know this at the back of the hand. I don't take a trade after a higher time frame key level gets taken out because those are likely to be the areas where we reverse. But that's a whole nother model for a whole nother day. and then we trade the reverse with the trend reversal model. This is the setup of the zone. All it is a GAN box, okay, and I just have the 0.5 ticked and the 0 and the 1. That's it. And the fib is literally all you need is the 0, the 618, and the 1. That's the fib setup. Appreciate that, bro. You're more than welcome to join. But you can literally be profitable with everything I just showed you now. You don't even need to join the premium. It's just obviously if you get a lot more access, you get to ask me questions, you get to see me live stream, etc. But at the end of the day, I always say this, right? I've said this a thousand. You're gonna be the reason you're profitable, no one else. You have to put the work in. Like, I know people they watch one video, they watch a course once, and they think, yo, like, why isn't this working, etc. It's not gonna work like that. You have to put the time in. There's no cheat code. Also, while I'm here, don't get scammed. There's a lot of people with a fake username that pretends to be me, so don't get scammed. Make sure it's my username. Always message me. I'm never gonna ask you for money, and I'm never gonna ask you to copy trade. The zone's always the last break of structure. So when we break structure here, this is the area where we want to look for a trade in. Pull back into this zone to continue higher. In these examples, I still have them. This is where we shift to structure. Yeah, exactly. They always misspell it. They can't have the exact name because luckily, like you can only have one username. So it won't be a deal trades one. It'll be like a deal trades 11 or a deal trades dot one. That's how they trick people. Right. Can you see here? This is where we broke structure. So this was our zone. Just gonna stop the recording.